Hello, I'm Simon Gogol. I'm the manager of the Merchants Trust and the Chief Investment Officer at UK Equities at Allianz Global Investors. The Merchants Trust is an investment company which is designed to deliver shareholders a high and rising income stream. In fact, the dividend has been increased every year for 41 consecutive years, but also to deliver an attractive total return over the medium and long term to shareholders through investing in predominantly large cap UK listed companies. Merchants has delivered really strong performance at the total return level over the last 3, 5 and 10 years. This year to date has been a bit more challenging because the market environment's been a little bit out of favour for our value style. We've seen some of the higher growth companies perform in terms of stock share prices a bit better, and some of our companies have underperformed a bit, but the medium and long term record is still very good. Actually, in terms of the income story, the dividends, there the story is quite positive. We're seeing a good income flow into the portfolio, and the directors have been able to raise the dividend. In fact, the first quarterly dividend of this year was increased by 3.6%, which is a step up from the rate of dividend growth that we were delivering through the pandemic period, where clearly income was more challenging. So we've seen good long-term performance. We've seen a more challenging short-term picture in the UK stock market for our investment style, but we've seen a good income delivery coming through into the portfolio and being reflected in the dividends the merchants are paying to shareholders. We have just over 50 companies in the portfolio, and whilst we have a bias towards larger companies overall, at the moment actually we've got quite a lot of the portfolio in medium and smaller companies where we're finding particularly good value today, because the UK stock market has been under pressure from foreign investors. There's been a lot of selling, and many of those medium and smaller companies have been left behind, and are offering really good value. In terms of sector allocations, although we're quite diversified, we do have quite a lot in some of the more cyclical areas of the market, which are exposed perhaps to the consumer, because where we're seeing, again, especially good value, because the stock market's quite nervous, investors are quite nervous about the outlook for the more cyclical parts of the economy. On top of that, we've got quite a big exposure to areas like energy, finance, some of the banks, but also some of the other financial areas like insurance, where again we're seeing strong businesses and attractive valuations. Well, in the last few months, we've continued to find lots of new ideas to add companies to the portfolio and areas to take some profits. I wouldn't say there have been major structural changes to the way the portfolio is positioned, but we have put more money into medium-sized companies where we are finding particularly good value. And we've taken profits on some of the larger companies, particularly, say, in the defence area, where we've had strong performance, one or two other areas where we've seen shares perform well, in order to fund some really attractive and interesting situations amongst the medium-sized companies. I'd like to talk about a couple of companies, very different companies. One is domestic and one's very international. The domestic company is called Pets at Home. You may know it. It's a company that runs a lot of over 400 pet shops in the UK, but they also have a chain of vets. Many of the vets are co-located in the stores, and that joint arrangement actually gives them quite a unique position in the UK pet industry. It's a very strong market with structural growth. People are spending more money on their pets. Pets are living longer and having more medical treatments which cost money. So it's a growing market. And we saw an opportunity last year to buy into Pets at Home when the shares were depressed, because investors were particularly concerned about the outlook for consumer spending more broadly, and that brought Pets at Home as a retailer, brought the valuation down to a really attractive level. So we're able to buy a very strong business at an attractive price, which we like to do. The second example is a more international company, a company called Inchcape, which is one of the largest distributors of cars in the world. And by distributors of cars, what this means is, in fact, in some of the emerging markets and smaller markets, they really operate as the manufacturer. They operate for the manufacturer. So they represent, for example, the Toyota brand in Hong Kong, and they've been doing that for 50 years. And they will bring the cars into the market. They'll do the marketing. They'll supply the cars to the dealers. They'll supply all the spare parts and the interaction with the customers. And really, what we're seeing in the car industry is the big car producers don't want to manage the smaller markets themselves, and they're increasingly outsourcing that to companies like Inchcape, which is the largest operator in that. and they're operating in over 40 markets for over 50 brands. And you're seeing an opportunity to grow as Inchcape can consolidate this quite fragmented market and operate for more and more brands in more markets. And that's giving them growth opportunities, as well as a sound fundamental business, which makes high returns and attractive cash generation. So we think Inchcape's an interesting business. The shares have been derated heavily in the stock market due to specific recent concerns. And that's given us an opportunity to buy back into this company. We've owned it before, but to buy back into it at a very attractive price. I'm very excited about the opportunities in the UK stock market at the moment. The UK stock market is trading close to its 20-year low in valuation terms, at a time when some other markets like America are trading quite close to their 20-year high in valuation terms. So that is quite unusual, and that indicates there's a lot of value in the UK. But also within the UK, there's a massive polarisation between the higher rated businesses and the lower rated companies, such that not only do we have a cheap market, but also within that, there are some real bargains around. I think what's happened is we've seen many investors shun the UK stock market, and that's really created opportunities for value-orientated stock pickers. So we're finding opportunities across the market, actually, in defensive areas, in more cyclical areas, domestic companies, more global businesses, really in a number of areas. And we've got large positions in areas from insurance and banking through to energy, through to the consumer and pharmaceuticals. So really, it's a really exciting time to be a stock picker in the UK. And we have a portfolio that's quite heavily biased to the cheaper parts of the market, but to really good companies in those parts of the market and where we see great opportunities. Thank you very much for listening today. For more information on the Merchants Trust, please visit our website or click on the link in the description.